Okay guys, I'm going to show you how to scalp a market.
Matron, take them away.
And a warm welcome to one and all. This is your first time here. I'm the big fella Scruff. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do hit the subscribe button and we'll bash on. So it's going to be a very quick video today because I'm actually having a day off. Well, I've been trying to have a day off for the last few weeks and let's just say I failed miserably. But today I'm done with my wages. I've got nothing running, no tickets. And that's kind of what I've done and sort of taught the guys and one thing and another. And I'm kind of recovering from the weekend because it was a heavy old weekend, which is why I'm trying to have some time off. But next week I'm definitely having time off because I'm going on holiday and I'm going to switch off completely. Not take the laptop with me or anything. Because I'm not one of these silly sods that sort of goes, hey, look at me, I'm under a palm tree. I'm amazing. Dickheads. Anyway. How do you scalp these things? Well, the first thing you want to be doing is zoning out. Alright? And what is zoning out? Well, zoning out is exactly what it says it is. You want two areas where the price is trapped. Okay, so one here, one here. So that's fine. We've also got a direction. Where can we see the direction? We can see it right there. Until this market tells you otherwise, it is going down. Okay, there are ways you can do this. If we just sort of just take off these indicators for a second and we'll build it up. What you can do is you can go, right, okay. Standard EMA, so you can have an exponential moving average, which is here, and you can have it set to a 20. That is there, 20. If we are below the 20, we are laughing. Okay. What else can you do? Well, you can click on your old 50 as well. Right, there's a direction. Why? Because the 20 is under the 50 and the price is under the 20. So you've got that is a deeper trend. This is the midterm trend and the price itself is telling you exactly what's going on right now. So that's 3 points of information telling you this is down. Simple. All right. So once you've got that in place, you can go, right, what else can I do? Well, you can say, well, what's happening actually in the moment? Well, again, there's an 8 EMA that hooks the price is under and it's tagged. Right, okay, everything has just told me this thing's going down, but it's at the low end of the range, so I want to be careful. Okay, next thing, boundaries. Now you have daddy levels, which are daily chart levels. Pull that out to daily and we can see what's going on. Well, let's drop some in. So you got one there. Okay, I'll put these in purple. One underneath it. Whoops, sorry. One underneath it. We are sitting on one right now. And then obviously you've got one there. Then you want the meridian line, which is the center point, which is there. And we're going to put that in a dotted line. Now what I'm looking at here is not new. This has been around since the 30s and the 40s. This is age-old way of looking at the prior candle. Come down into the next section what can you see? Well, we can see that it's holding underneath yesterday, but that is a significant level on its own, even if it is a meridian line. Look, boom, 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 boom. Right, so, right, okay, it's pushed down here, but the pressure is this way. Now, what we're doing here is a little bit of homework, guys. We can see a solid drive as well. Okay, well, let's see what else we've got. Well, that drive started there and ended there. Well, again, we're holding under the 50%. The longer it holds under the 50% of a drive, it'll look to go to full retracement, certainly into the levels that's there. All right. So again, this is telling you this is going down. All right. So you're building up a picture. Hourly. Right. Well, what's the hourly got to say for ourselves? Well, this one slightly different. We've got a drive here, we've got a drive there, and consolidation. Okay. What can we do with the drive? Well, the first thing is we look at the completed leg, which is this. Get an extension on, because it's already broke through. Whoops, sorry. It's gone a bit tits up there. All right, extension on. Top to bottom, where this thing started. Come back. Right, bingo. 127 lines up perfectly with this zone where it's revisited. 161 perfect to a key level that I've put in. Right, so all my levels are now marrying up with fibs. All right, what else can we do? Well, we've now got a bias and everything to the short side. We've been confirmed with an 8 EMA. All we need to do is look for a trigger point. Well, there's another way to do that. You can go, right, well, there's a push down here. Now, this is all chart reading, guys. There you go. There's your 23, 38, 50. These become what are called T lines, trigger lines. Okay. And what you do with these is you use them for entries, exits, whatever you want. But again, it balances the chart out. Just like so. 23. Excellent. Right. Everything's sorted. I've got areas of attraction. I've worked out a direction. Now all I need to do is figure out if there's an entry. Okay. How to do that? Well, I'm going to drop it down into 15 minutes to see what's going on with this. Well, there's a lot of things we can do. You can see the state of play with the market. You can put on something as simple as a stochastic. This is a fast stochastic. And you can see it's pushing over here. It's been up to the extreme and it's pushing down. How do we know? Because the green line is pushing that. Let me just open this up so I can show you what everything is. Tell you what. Make that kind of a bit thicker. Just doesn't seem that bright, that's all. Tell you what, if I do it, yeah, red highlights it a bit better. Right, so pushing down, it has been to extreme and now it's pushing. So that can tell us that there's trigger points. Well, there's a trigger point here, 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 here. Right. So that's the 15. So is it ready? Well, go to 5 and let's have a look. Well, that's still pushing down. It's pushing up, but we have a compression. Okay. Well, let's have a look, see what the DNA of these candles are. I can see in this compression here, where it's sort of bunching up together, that it's predominantly red, but there's a bit of a breakout. All right, let's see what the last candles are. Well, strong, strong, weakening, weakening, weakening at a pressure point. So all I need to do now is just drop a quick order in underneath, just like so. I'm going to look to be in and out of this relatively quick. So all I need to do is just come down to here. That's it. Job done. You know, that's all the way down into a minute candle. And all I have to do, see, if I just target that point there, which is about 10 pips, you know, why that? It's the base of the compression. It has a good chance to come there. I'm going to follow the green candles up on a 5 minute. So I'm going to go back to 5 minutes, just like so. And I'm going to follow it up into this because it's about ready. Simple as that. Do I need these? Not really. Just let it get on with it. And that's it. So that's breaking a chart down. It's understanding what a chart is. And then just looking for a reasonable entry to get in. Job done. You know, stops. Just be conservative with them, guy. Look at sort of swing points, barriers, that sort of thing. When you're scalping, you've got to be a bit ruthless with them. If you're wrong, just get out. And that's it. Personally, I sort of manage mine out. The way I do it is I have a wider stop than normal. It's not such a stop that it'll kill me, but I'll stage into that stop. Makes life a lot easier for me. So let me play this out. I'll come back to you in a minute and we'll just see if we can get 50 quid just to show you quick. That's it, guys. Done. Just over 10 pips for 20 minutes, however long that was. Nothing running. There's the ticket. Bingo. 55 quid for basically just reading the chart, getting a little bit of an understanding of what's going on, and just hold my nerve and resolve. Simple as that. So there you go. Very quick, easy video for you. These videos are really just to sort of inspire you that it can be done. And what you got to remember is, right, how do I put this politely? Well, I probably can't put it politely because, right, if you're chasing the money and you think you're going to be in the markets over and over and over, just go to McDonald's, get yourself an application form and get a job. Because this job is about preparation and patience, not pressing the button. And if you're chasing the money, you've already failed. If you're looking at guys that are just sort of flashing the lifestyle, oh, look at this, I am amazing, look at my villa, look at my Lamborghini, look at my swimming pool. A lot of the time, it's not right. It's not the job, you know. Is this lifestyle good? Yes, it is. But it's also very, very hard work. Now, personally, I earn a half decent wage and I'm on par with a reasonable professional. Am I wealthy? No, I'm not. You know, not even close to wealthy. I'm just a guy doing a job that happens to do okay with it, you know. There's very, very few get into millions. Very few. But you can earn a living, a half decent living. And think of it like a jobbing actor. There's only a few of them going to be Tom Cruise and Brad Pitt. The rest of them are just extras. They get paid. They probably get paid quite well if they get the odd speaking line. But they're not A-listers. That's where you fail in this. You're told this job is easy. It is. The hard part is you. Because you believe the guff. If you believe the guff, you've already failed. If you're following people that are just constantly peddling the guff, it's nice to watch. But if you believe it, you've already failed. And that's it. Just treat it as a job. Do it systematic. Do your homework. And you'll be fine. So there you go. So as always, guys, trade well. Keep your risk managed. But above all, do what you love. And the money will follow. See you all in the next one.